Bank of America is making big cuts in order to bolster its profit and share value. CEO Brian Moynihan saying just today that the firm will cut 30,000 jobs over the next few years, equal to about 10% of its staff. For more on the future of the financials and specifically BofA, we turn now to Portales Partners' Charlie Peabody. Charlie, by the way, is a Bloomberg best on several Wall Street banks. He's got a buy on Bank of America, which I'm going to kick it off with that question.
Sure.
It kind of floors me, this company, which is down almost 50% this year, that so many of you guys still have buy ratings on it. Why?
Well, I think the thing we missed is the marketplace's determination to price in a recession into these stocks.
Is it just that, really?
Well, and the uncertainty of Europe,
regulatory
environment, and how the time it'll take to get out of this mortgage litigation process.
The latest move by BofA. These are big cuts, about 10% of its workforce. This is a good thing. I guess, you know what I thought of, is this been a cost problem for BofA, or hasn't it been, wow, all those mortgage assets that we still have exposure to, those concerns?
They're all interrelated. I mean, it starts with you need to de-risk the balance sheet and recapitalize the balance sheet. Those processes means shrinking and selling non-core assets.
But people say their balance sheet, actually, if you can kind of forget the mortgage, I mean, they've got a lot of cash, they generate a lot of cash.
Yeah, but this is more for capital and de-risking purposes. And so when you shed assets, you lose revenues.
Right. So
your expense base, which a year ago was $73 billion, was built for that expense structure was built for a revenue of about 115 to 125 billion of revenues.
Right.
Today, their revenues are around 100 billion. So they have to do something to restructure the expense base to get their profit margins back.
Hey, Charlie, I know it takes a long time to steer a big ship, but I was hearing that they want their estimates for the value of certain businesses in April, which is a long way from now. And it seemed like this morning there were so many different options and possibilities for what they could do strategically. It just doesn't seem like they have a concrete plan to move ahead already now set in stone. Does that concern you?
No, I would disagree. I think they have a very well-articulated plan. The problem is there are certain externalities they have no control over. I mean, if Europe blows up and pushes us into recession, that's not something they can affect. But their plan is fairly well articulated, I think.
Charlie, what do you make, though, of all the recent moves that we've seen out of BofA? Is it just reaction to the stock price being hammered? I think about Warren Buffett getting involved, the management changes, and now, it was just recent that they announced some job cuts, but they weren't very significant.
Right.
And now we have massive job cuts at BofA. Is it a reaction to the share price? Is it the board saying, Brian, get your act together, we're going to get somebody else in there? Is it Warren Buffett saying, I made this investment, but I want to see this happen?
Well, the markets, as we saw in 2008, 2009, can accelerate steps that you need to take over some period of time. And there's no question the way the markets started acting this summer, Bank of America had to accelerate some of their restructuring plans. So I think the Buffett investment was a reaction to that. The bigger expense reductions that they're announcing today is reaction to the marketplace's concerns. Mm-hmm. And that's unfortunately what they don't have control over is how will the markets behave and affect the timing of their plans. But the plans, I think, are solid.
This may sound like a very simplistic question, but I'm going to ask it anyway. Back out countrywide, and would you love BofA?
Well, as they point out, 5 of their 6 businesses are profitable right now, and the unprofitable one is all related to the mortgage business and the litigation costs. So yes, there's a big, if you were to back out all those, unusual items, they probably have about $1.20 a share of earnings power, which would justify a higher stock price, right?
I'm sure Brian Moynihan would love to back out countrywide as well as impossible. I heard someone say they should spin it off as a European bank today. If you look though at their exposure to Europe, they don't have the kind of exposure that their competitors, the biggest competitors, have, right? So that's a plus. And also, it seems like the U.S. government, maybe the Obama administration, has gone to the FHA and said, chill out. What do you think?
Well, on Europe, you're right. They've got about 16, 17 billion of gross exposure and about 11 billion of net exposure. That's after you take into account their hedges. And in terms of the FHA, I think that issue is going to get it rolled into the Attorney General Department of Justice settlement. And that's really their big exposure. It's on the mortgage servicing side under the Securities Fraud Act. It's not on the origination side. One of the little-known facts is most of their FHA loans that are on their balance sheet were originated by third-party correspondents respondents. That's when the insurance that the FHA guarantees was placed. So it's those third parties that are responsible, not B of A.
Hey, before you go, Charlie, I want to bring up JP Morgan CEO Jamie Dimon writing in the FT today, and he talks about bank rules, and he says specifically, I'm very close to thinking that the United States shouldn't be in Basel anymore. I would not have agreed to rules that are blatantly anti-American. His concern is he doesn't think that banks should have, it's okay to maybe have more capital, but he says that the moves to impose an additional charge on the largest global banks went too far, particularly for the U.S. lenders. Is he kind of right here?
I think he is. And if you press anyone in Japan at the Ministry of Finance or the Bank of Japan, they'll tell you one of the big mistakes they made in the 90s was over-regulating the banking system. And I think we're making that same policy mistake today.
It's swinging too far once again.
It is.
Got to run. Charlie, thank you so much.
My pleasure.
Charlie Peabody over at Portales Partners.